gold may actually be like $8,000 to $10,000 an ounce if Bitcoin didn't exist. What do you think?
All roads lead to Bitcoin, right? In my opinion. That's why people also have said, within the crypto VC industry, like altcoins have been, on the margin great because at some level, those who find success in altcoins eventually allocate some portion back to Bitcoin regardless. Wealth creation leads to Bitcoin as part of the denominator. And so in some sense, gold is also an altcoin in my opinion, because
What's going on, guys? Today we got a great episode with Jeff Park. Jeff is the CIO at ProCap BTC. And in this conversation, we talk about the debasement trade, why governments are going broke, but everyone else seems to be getting rich. What's going on with Paul Tudor Jones, Ken Griffin, and many others being so excited about the market. And then we talk about the Polymarket and the ICE deal, where $2 billion is being invested into Polymarket and what that means for prediction markets, news, and entertainment in America. Here's my latest conversation with Jeff Park. All right, Jeff, big week for us to talk through. You had a great tweet, though, before we get to the current events that is important to talk about. You said, has there ever been a time in history where the government went broke and everyone else got rich? Which I think is just like a very good visual as to what seems to be happening right now with the U.S. government and all of these investors. Has there ever been another time like that? Like, how do you think about this current situation we're in?
Isn't that funny? I feel like the first time we had a U.S. government shutdown, I remember vividly, people were freaking out about U.S. credit downgrades and the market would have huge sell-offs. And then, of course, it would quickly bounce back. But there was dislocation, there was heightened volatility, and there was a lot of drama. Now, it's actually kind of amazing how much of it has become part of our social fabric, and accepting that government shutdowns is a way of life. Volatility has not gotten higher. Equities are still rallying and the world is moving on. And I thought how amazing that would be in the context of the big picture here actually being that only the US government shut down, but really, which government didn't shut down in the world? China, right? Like China is a government that has actually never shut down. And it works every single day. And I thought maybe there's something there as a story that we need to understand as Americans. The other thing that kind of took off this week, I don't know if you were following it on Twitter, was they had this great release of a new bridge they built, the Huanjiang Bridge, across these two very rugged mountain peaks. And it was a sight to behold. It was like this incredible bridge that's like 2,000 feet above the ground and connects like basically two mountains. And apparently it cuts the traffic of what used to be a 2-hour drive into 2 minutes. And just to put 2,000 feet in context, that's taller than the World Trade Center. Mm-hmm. So imagine a bridge that's the height of World Trade Center just going through mountains, and the industrial capacity of a country that can put that into might. And then the US government, of course, shut down. And the other news that happened was the MT just raised fares to now another 10 cents. So it's $3 for the ever fiscal problem that the MTA will never solve. And so you see this like contrasting story. And I think that's actually what's at the core of it. The US government shutdown is not the story anymore that kind of drives global markets.
Nobody cares. Nobody
cares. It actually shows you, I think the center of gravity has changed from that being driven by market first principles of what the US stock market would do by investor flows to actually one that is driven by global fiscal dominance across every sovereign actors, in which the things that people are worried about and caring about is the things happening on the political arena. So the other big news that were happening throughout the week is, Japan now has a new prime minister, Sanae Taikachi, who is basically going to print money forever. And you also had the French bonds blow out because their PM resigned. And all of these things actually are correlated to the continual path of just fiscal dominance, of there just being more continued printing of money. And so I think US government shutdown aside, like that just becomes irrelevant as a story when other things that are happening in the rest of the world is driving that unstoppable agenda.
What's funny to me is as all this is happening, obviously institutions like these people are very smart. They're paying attention all around the world. They've got a lot of data and analytics, and they obviously have access to this information of the stories. And all of a sudden, they now have a new thing to cling on to, which is the debasement trade. The debasement trade is going to be the thing that protects them, which is the same thing that gold bugs have been yelling about for 50 years, Bitcoiners for about 17 years. And it just feels like now the institutions are kind of like, oh, the light bulb went off. Like no one's ever going to stop printing money. Why do you think now is actually hitting? Is it because we're 5 years after 2020 and people start to feel it? Is there some data point that they're looking at? Like, why is the quote unquote debasement trade now the thing that they're all like, all right, fine, you guys are right?
I think it's happening because the slow buildup to that moment of reckoning has been seeded into our minds over now for a long period of time, really post-COVID and post-Russia-Ukraine war and everything else that's been happening, to show you that the kind of unipolarity of the geopolitical order is a bit at risk. So I don't think people just woke up one day and decided like, oh, debasement is the thing that we want to focus on. It's been like a steady crescendo of a buildup. And now what we're seeing is just more kind of, I think, authentic embrace by the people and recognizing that it's actually happening. And in a maybe more optimistic lens, what can we do about it? And actually try to be on the right side of history to see that as an opportunity rather than fighting this thing as if there's a solution. I think there used to be a time when people really wanted to talk about like, how do we cut down Social Security? How do we cut down these things and bring fiscal health? And I think you ask an average person on the street whether this is on people's mind anymore. I don't think it is. People, I think, have accepted that this is like actually what's happening. And now it's up to you individually to figure out how to best navigate that for your own personal self-preservation. And I think that ethos is kind of what changed. The other thing with that in particular is like, it really comes down to the US credit ratings continually being downgraded and now just having also been kind of not been taken as seriously as it once might have been. Like that, I think that stick is no longer that powerful. Mm-hmm. So last week, Moody's again threatened that they're going to have another notch of a downgrade and no one really cares, right? It's actually the French bonds downgraded and no one really cares. Like it actually is just kind of, I don't know, like financial games in a world where the entire narrative has moved towards like industrial production. So I go back to China, kind of where like the thing about China, whether you like them or not, but that they've been very truthful about is that they're leading by industrial might. It's like real commodities, real production, like putting real things into actual kind of people's hands to build. And so this funny money game is actually becoming less relevant as people are now opening their eyes towards the importance of these true productive capacity, which is why I think on the other side of the debasement trade is the AI trade and all the massive capital that is flowing into what people are hoping will be actually productive utilities. But that great picture is the trend that's, I think, somewhat unstoppable. I joked about a month ago, I put out a little bit of satire, which was that we need to think about risk-free rate having a totally different definition now. And we now have to go around and tell everybody and call it the risk-full rate to start really normalizing that idea. Like the risk-free rate of the dollar hegemony is obviously kind of the thing that's at risk. And if you embrace that to now be considered risk-full rate, well, there's a lot of other things I'd rather bet and take risk than trading US bonds. And I think that's what we're seeing. People are taking more risk on the risk curve because if the bonds are unstable anyway, and that premium is not worth it, then there's tons of other things you'd rather be doing.
Today's episode is brought to you by Bitcoin IRA. Are you a crypto investor with a retirement account, but don't have any crypto in your retirement account? Listen up, this is for you. Bitcoin IRA is revolutionizing the way Americans save for retirement by helping smart investors diversify their savings with access to over 75 cryptocurrencies. With world-class customer service, military-grade encryption, and a vertically integrated licensed trust company, it's no wonder more than 200,000 Americans trust Bitcoin IRA to secure their financial future. Get started. It is quick and easy. It takes just 3 minutes to open an account. Once you're set up, their team of IRA specialists will reach out to guide you through every step of the process. Whether you're transferring an IRA from a legacy bank, rolling over an old 401k, or starting fresh with a new contribution, the Bitcoin IRA team is here to help you get access to real crypto in your retirement account. And here is the best part. As a Pomp podcast listener, you can earn up to $1,000 in rewards when you add funds to your account. Search for Bitcoin IRA in the App Store or visit bitcoinira.com/pomp to join 200,000 Americans on their journey to upgrade their retirement. That's bitcoinira.com/pomp to upgrade your retirement today. So we now are seeing a lot of very well-respected investors come out and talk about this. We saw Ken Griffin come out and say that individuals are de-dollarizing their portfolios and they're inflating asset prices. Paul Tudor Jones was very bullish on CNBC this week, talking about things like Bitcoin and gold and saying he wants to have a position there. We saw Morgan Stanley now say that a 2 to 4% allocation is something that they want to support their 16,000 financial advisors in doing because they're getting a lot of inbound inquiries. Vanguard now is kind of capitulating and waving the white flag. I mean, you just go through and you're just like, okay, hold on a second here. This now feels like there is no longer a debate about this, that people realize the dollar and bonds are going to have a lot of trouble moving forward, and therefore Bitcoin and gold are definitely benefiting. I also think stocks have become somewhat of a inflation type hedge or a debasement type hedge. But Bitcoin and gold seem to be the ones that people are really latching onto as part of this quote unquote debasement trade. Absolutely.
Absolutely. I think going back to your Morgan Stanley news flow, the part that was really kind of amazing there is one, I think we've been so excited and wanting to see private wealth management and financial advisors come to embrace Bitcoin as an allocation in what is pushing out the efficient frontier of modern portfolio theory. So that's great news. On one hand, though, the thing that I thought was a little funny and I snickered a bit was that the way they allocated the recommendation was 4% for a bucket that was called opportunistic growth. Opportunistic growth. I thought that was funny. Why? Number one, opportunistic implies as if this is like a temporal event-driven dislocation
that maybe you
might shift now, but then later you'll trace back and buy something else. And it's like an opportunistic thing, like right now, which I thought was kind of funny because anyone who's been around long enough knows this is actually the opposite of opportunistic. It's as evergreen as it comes. It's the store of value. It's permanent. Like you should have that always. There's nothing opportunistic about wanting the best store of value. And then growth, I thought, was also pretty hilarious because growth, again, like financial advisors think about it in terms of like equities versus bonds, like growth in equities because earnings are growing and we're actually inflating the economy with productivity gains and the rise of young people having more children. Like growth is in a capitalism definition is pretty market driven, right? But Bitcoin in growth, I mean, that's not really growth. I would call that kind of value, right? It's the idea of like buying something that you think is valuable to store wealth. Yet again, that isn't really driven by growth. So I just thought it was funny that Morgan Stanley made the move, but they called it opportunistic growth. When in hindsight, I think it should have been called like evergreen value.
Evergreen value, right? You can just imagine.
I think maybe they'll do that next year. You know, we got to start somewhere, right?
I don't know if they're going to do that ever, but we can only hope, right? But I do think that to me, I took away the fact that they explicitly called out that the financial advisors were coming to them saying, "My clients want this," right? And it does feel like there is this pull in the market. And, you know, I still am getting a lot of questions from people about gold and Bitcoin and the fact that gold is up 50% year to date. Bitcoin's up 33. If you go back a year, right, obviously Bitcoin has doubled the performance of gold. You go back 5 years, Bitcoin is 10x the value of gold or appreciation of gold. But I do think that there is this like short-term momentum focus, especially on Wall Street, of like this year, gold is outperforming. Should I buy gold instead of Bitcoin? How do you think about like looking at short-term momentum versus maybe the longer-term trends where Bitcoin's really been outperforming?
I think both are durable allocations investors must have, and there are distinct advantages and disadvantages to both. But in 2025, the idea of having store of value in your portfolio that isn't dollar denominated is a key story. Even in most financial crises in the past, what you saw was generally the dollar strengthened and investors' flight to safety included dollar-based assets and wanting to save money with US bonds. And that paradigm has fundamentally changed. I don't think people are looking for dollar-denominated assets. That's why gold is actually so powerful in its outperformance and noticeable by even Americans. And Bitcoin, I think, is part of that narrative. The difference there being that Bitcoin still hasn't found institutional flow the way gold has. But you know, institutional flows can just mean different things for retail investors finding allocations for. Gold is, to be honest with you, very hard to store, right? I know it's easy to buy GLD, the ticker, and have allocation to gold's price. But one of the things people have called on for years, even the most diehard gold bugs, is that GLD is not gold because it's an IOU that once you feel like you need it at the exact moment of its tail risk, it may not be actually available and it could just evaporate. And in that sense, that challenges the idea of custody, right? The idea of self-custodial ownership, to which anyone who owns Bitcoin I think we'll find that aspect much easier to do. Of course, there's still the Bitcoin ETF that is a parallel comparison to GLD, but it's much easier to buy Bitcoin and store than actually buying bullions and trying to find a safe box and put it through and hope you don't get robbed. So I do think eventually, like, people will see there are different benefits to Bitcoin too, where it's actually pretty useful from like a velocity of transaction and velocity of transfer perspective. I think institutions, once they see that, will also find this to be a much more efficient way to actually store wealth. And we're just at the very, very early innings of that story. So gold's success is good for Bitcoin. I have always shared with people that we must root for some success of gold to the outcome that we're driving about self-sovereignty. And then the journey advances once people realize that there's different trade-offs to which Bitcoin can outperform even gold. And I think what we're seeing is more of that migration across the mass population psyche.
You know something I said to a friend that I'd never thought about before? Everyone always thinks about, Bitcoin is growing and gold is siphoning some of the capital flows from Bitcoin into gold, central banks, all this stuff. But if you think about it the opposite way, if gold is at $4,000 an ounce, imagine if Bitcoin didn't exist. It'd be at, I don't know, 10, right? Or some big, and now again, the market caps. And so maybe you'd say, oh, actually it'll only be at 4,500 or whatever. But just like the fact that you have the fracturing, it's not just about the pure market cap of spot Bitcoin. You then also on top of that have the Bitcoin treasury companies. You have all of the private companies associated with Bitcoin where capital has gone to get exposure to Bitcoin indirectly. Like you start to like stack all this up and you're like, gold may actually be like $8,000 to $10,000 an ounce if Bitcoin didn't exist. What do you think?
All roads lead to Bitcoin, right? In my opinion. That's why people also have said, within the crypto VC industry, like altcoins have been, on the margin great because at some level, those who find success in altcoins eventually allocate some portion back to Bitcoin regardless. Wealth creation leads to Bitcoin as part of the denominator. And so in some sense, gold is also an altcoin in my opinion, because those who make money on gold, especially the young people, will eventually look to diversify and the correlation will not be perfect. And so if you made a ton of money in gold, you have the higher chance of winning allocation from that pocket of money to invest in Bitcoin than from Nvidia or from French government bonds or anything else. So actually that kind of diversification outside of gold is probably a pretty meaningful trend we'll see. That's why when Tether also launched the product for where there's performance dictated by Bitcoin and gold performance, as one of the first products they're going to institutional investors with, that shows you already the interplay that's possible by kind of widening the mode of people to invest capital into a pool of asset where you're actually being kind of Trojan horsed Bitcoin exposure in the back end.
Yeah, it's pretty interesting how, Tether, they have XAUT, I think is their gold backed token. And then them and Cantor launched this like gold and Bitcoin thing. Gold is an altcoin for Bitcoin.
Yeah.
I kind of like that. I don't know if a lot of the gold bugs are going to like that, but to your point, especially young people, it does make sense.
Absolutely. And that's why I think one of the just challenging things with Bitcoin right now is when the volatility is low, young people are not interested. Young people really do like momentum and they like volatility. And as much as we talk about Bitcoin, the virtues, at the end of the day, people want to own things that they feel excited by and things that represent kind of their investing style. And you can't deny that momentum and volatility embracing is the most important thing, for which I think gold has succeeded. Gold's volatility is higher now and momentum has been great. And so it has become a bit of a substitute for that. But at the end of the day, Bitcoin will try and fall because the definitional construct of its scarcity means that there will be higher volatility in the future.
Paul Tudor Jones was very bullish, as I mentioned, but he said it feels like 1999, just not the end. He kind of felt like we're in the middle of it. You, I think, have a different view as to like 1999 and the feeling of the euphoria and excitement that people have in the market right now. Explain it.
Yeah. By the way, Paul Tudor Jones has been a Bitcoin bull for a long time. And I think long-term, he understands the exact Bitcoin thesis. At the same time, it's hard for me these days to dispassionately remove the Bitcoin narrative from stock market valuation at some level, because I think they are more correlated than people would want it to be. So the first dimension really is recognizing that we're in a totally different public versus private sector investment scheme. In 1999, the US GDP was growing on the back of globalization as a trend, and the debt to GDP ratio was around 40%. It's a healthy market to grow into. Right now, it's 120%. We're over 1, right? So that's very different. And then 2, from a fiscal deficit perspective, we obviously know we're now in a deficit, where in 1999, we were actually a net saver. Even though the current account deficit was starting to grow because of the federal surplus, it was still actually a saver economy, which is unimaginable to even think about for most young people today. So that backdrop is already really different. It means that the role of the private economy had been a larger presence in 1999 than I think now in 2025, where most of the kind of financialization of the markets we're seeing is really driven by sovereign flows. So in that sense, this overvaluation and the stretch is not just coming from, I think, the private sector and individual investors. It's really coming from institutional flows. And there's not a more prime example to share on that beyond the fact that the US government is proactively taking stakes in public companies here in this country at this moment. There's more than 5 now, right? And Intel was the first kind of
only 10%. Only 10%.
Only 10%. So capitalism is still very much alive. But to me, like that is so incomparable to 1999 as a construct. And on the political front, what was happening in 1999 too was like, again, the beginnings of globalization, right? China was not part of the WTO yet. In fact, the euro currency actually was not really adopted in 1999 either. It would actually take a few more years. I believe it was 2002 when the euro actually was put in the hands of the people. And in 1999, the idea was introduced as an accounting principle. So this is a pre-euro, pre-China WTO, pre-Eastern Europe being part of the Eurozone world, to which now we've shown all of that has not worked. And it's totally being unwound to this particular moment, where I think all of this just shows you like there's many other things that are happening at the global level that we have to take into account.
Today's episode is brought to you by Core. You can earn yield on your Bitcoin by just holding your Bitcoin. It's simple. Core, the leading Bitcoin scaling solution, will reward you for not selling your Bitcoin. It's not magic. Here's how it works. Core is a protocol secured by elected validators. You can help elect validators and secure the network by simply locking up your Bitcoin on the Bitcoin blockchain. No bridging, no lending, and just holding. When your validator secures Core, it earns rewards fueled by network activity and passes them back to you as yield. With a minimum lockup of just 1 day, when the time lock ends, you get your Bitcoin back untouched. Still your keys, still your coins, now your yield. For even higher rates, stake Core alongside your Bitcoin and multiply your yield. And if you want to see what your Bitcoin is securing, join millions of others in exploring the largest Bitcoin DeFi ecosystem. There are over 100 live apps in the network and the deepest liquidity in all of Bitcoin DeFi. Get off zero and start earning yield on even just 1% of your Bitcoin by going to stake.coredao.org/pomp. Again, that's stake.coredao.org/pomp, or go click the link in the description. When you think about kind of capital flows in general, one thing that I think people look at like M2 money supply. I think they'll look at what central banks themselves are doing in terms of putting things on their balance sheets. I think that there's now starting to become an understanding of stablecoin or Bitcoin or kind of like on-chain type capital flows. What else do you pay attention to that you think are really kind of insightful data points when really understanding, where is the money, where is it going, and what does that tell us about financial assets?
I think global liquidity is like a bit of a catch-all phrase to include a lot of things people are paying attention and looking at. For me, I definitely pay attention to the construct outside of the Western paradigm. So like looking in towards China and what they're doing with their liquidity machine is pretty important. And on that point, the biggest driver of liquidity this year has been China, right? Their M1 liquidity actually has increased tremendously this year, and they are on now a pretty well-documented plan, right? They're actually cutting down the oversupply of all their industrial output. They're actually trying to bring consumption back a little bit, invest in the private sector the correct way. And so you've seen actually Chinese equities react to it. So like M1 liquidity injection by China is very real. And that I think is the headline story of 2025. Beyond that, credit creation also happens based on these like funding-based liquidity models that I think is really important. So in the past, it used to be that people would look at debt to GDP ratio as a way to understand the health of the global macroeconomy. But folks like Michael Howell have come out and said, actually, that's the wrong metric. What you really need to focus on is the GDP to liquidity ratio, because liquidity itself represents the duration of refinancing risk that is now being more kind of meticulously challenged by kind of the oversupply of global debt. So it's not important to just think about kind of GDP as a static measure. It's like, how much debt is there? And actually, like, how frequently do you have to refinance that? Because every refinancing is an event risk. So funding-based liquidity models are really important. So to that extent, looking at not just like VIX for equities index vol, but looking at rates vol is huge, because rates vol is the thing that is applied on the collateral haircut levels that cause liquidity issues. So anytime there's like a market shock and it's not driven by like something really secular at the level, but something being broken in the financial system, then you'll see it arise out of that funding-based liquidity lever. So I think there's a lot to observe there. And then the third I would add is the amount of shadow money creation in general. The private credit sector as a whole, I think, is something we all must pay attention to, both in China, but also here in the US. And you hear a little bit about how, the US economy is doing well because, earnings are growing, but also corporate credit spreads have narrowed. And so that must mean that the health of the US economy is a lot stronger. I have a different view on that. My different view is that there's an absolute return level that credit investors at the corporate level seek to clear the hurdle to put allocations for. There's an absolute number. It's actually not a spread number. There's an absolute spread. I need to hit my bogey of like 8 or 9. Well, when the US interest rate itself is giving you 4.5, right? Like the US is already giving you a lot of that kind of bogey. So what that means is, actually, if you're not investing on a spread-based level, but on an absolute level, you have more room to compress on the credit side, because the totality of it is actually still the same number. It's just that the US is taking a greater chunk of that credit risk in that construct as a percentage. But man, how symbolic is that to the conversation we were just having from the beginning, where the sovereign risk is becoming the risk in which all of these things are weaponizing the economy, where I think everything about the financial system today is like a wartime economy construct than like a peacetime economy construct. So this idea of even having compressed corporate credit spread to support the US's economic might to continue exporting its financial might, like that is kind of like all related at some level as to why we think the US economy is very healthy. It's just driven by kind of US sovereigns.
It's fascinating to kind of just think through the Western versus Eastern viewpoint, and how much of the conversation in the modalities that we get information, X maybe being the biggest one, is just so Western centric.
Right.
But then, China liquidity actually matters quite a bit.
It does. So funny, there was Token 2049 in Singapore and Korea Blockchain Week in the crypto community the prior week. And so everyone is now back in the US after that. And I've now gotten so many pings about how people are sharing, man, Asia is so wonderful. It's like so clean. Like the Singapore airport is a modern marvel. Like
Singapore's pretty crazy when you go.
It is. Yeah. You can't discount that. But they'll say it like in ways to put kind of the Eastern economies like in a bit of a pedestal. Like, oh my God, Chinese, like the things they're producing, how incredible. The bridge that I'm telling you, like, and they say it as if that also feels like it's an opportunity for them. Like, oh yeah, I'm just going to go live in Singapore now, or China. I'm just going to leave the US. Like, I'm going to leave this dump. And the funny thing I find about all this, as an Asian person who's lived in both sides of the water, is this realization that the crypto bros don't know, that you can't actually live in these countries and find acceptance, because Asia, by most levels of its social kind of societal foundation, is pretty protectionist. Like, I don't want to say Asians are racist, but there is a level of homogeneity for which the entire social hierarchy is built on. So like, yeah, Japan's clean and it's great, but guess what? Like, you will never be accepted as an expat into Japan ever. So turn that back around. Like, this is the greatest virtue of this country as America. Like, yes, maybe there are problems with like our infrastructure. And yes, like I hate riding the subway here every day. It's a pain in the ass. But you know what? Like, anyone can actually still come here and make their work count and belong. And you might think that the shiny things that they're building in Asia is great, but by no means is that an invitation for you to actually come live there, at least for now. So I think that's why we still have to continue to root for US exporting its culture
100%.
As part of a global superpower.
Let's talk real quick. ICE and Polymarket announced a pretty big deal. ICE is going to invest $2 billion at a $9 billion post-money valuation in Polymarket. I mean, prediction markets are here. Like, this is real, obviously. What is your take on the old guard partnering with the new guard rather than just taking it on the chin and getting disrupted?
There's so many ways to take this conversation, but the TLDR is I'm here for it. I love it. I absolutely love it. I have been sharing with folks that we must learn how to invest in a professional way that might also be called professional gambling. And professional gambling really sounds like a negative word, but I really mean it when I say, just like you have to understand accounting and mortgage math and how to save money and how interest works, and you must also learn how to bet in life, because betting is actually a probabilistic exercise that is so good for you outside of just the monetary outcome. It really helps you think about the world in a lens that helps you understand the ambiguities that exist across a spectrum of outcomes, that the world is quite gray and never black and white. So the readiness of Polymarket being a part of our financial infrastructure is showing you a big mega trend, which is financial information is becoming actually news information, which means if you want the world to be less divided about having political opinions that appear black and white, you need to start financializing it. And then see the grayness of the news items to which people can make smart, educated, probabilistic bets and expressions of their ideologies. And so it's really a wonderful thing. I think that it shows you that that ICE is also going to become at some level maybe a media company. I mean, imagine that, right? It looks like an infrastructure play, but if you ask Shane will say Polymarket is first and foremost also a media company in the ways that they're a source of truth and being the oracle of the world's biggest information market. And in that sense, the convergence of finance and information is happening. And at the center of that is that reality that data is kind of the last frontier of colonization. That's all we have left. You and I have valuable data. It's the one thing we can empower ourselves to find productivity in. What can you do about it that's not going to be consumed by the fangs of the world that you get to own and exercise the right to earn an income off? I think Polymarket and the way you can bet on information is an incredibly useful tool at the individual level. And we should really kind of usher in that era for everyone's possibilities to participate in that market. The other thing I will add is there's been a long growing trend of actually the CFTC becoming a little bit more retail centric at some level too. And you see that through the lens of the CME, because CME once upon a time you would have known is just an institutional trading exchange for big boys, right? It's not a place for like retail investors to go trade. But over time, the stance has changed a little bit. You saw it when, for instance, the CME group launched these micro futures contract called Bitcoin Friday futures, which they coined as BFF as a little moniker to be your Bitcoin's best friend or whatever, forever friend. And then you saw their recent partnership with FanDuel as well to kind of bring in more professional gambling into the arena of like business. And you're seeing that like happen. So this idea of like retail financializing betting markets is not just like a retail story. It's actually an institutional story too. And the lines again are becoming very blurry. And I think that trend is pretty inevitable at this point.
I think that the prediction markets are now people are starting to understand the financial component. If you go back to February when we announced the partnership we did with X, one of the big things in there was like the prediction markets should be incorporated into the news. And I am shocked. Like you hear it every once in a while, elections or something, right? But how many people go and buy Tesla stock based on a belief that they're going to hit or miss delivery numbers? Why not just bet on that one thing? And why not talk about, are they going to hit it or not? Not based on Wall Street analysts, what is the market saying?
Right.
Like that is so much more powerful.
Totally. Polymarket now, I think, sends out weekly this like newsletter, which shows you their most active markets. And I look at that newsletter because to me, it shows you what are the news items people are focused on. It's actually a great filtering mechanism because it's showing you there's economic activities around the things that have attention. And so rather than going to the New York Times where you're looking at like a curated list of stories, someone's telling you these are the things you should be reading. Here's Polymarket just literally saying, these are the most active markets. Therefore, it must be the most interesting market. Not just because people are focused, but because they have views and spreads.
100%.
And what's more interesting than an arbitrage that comes from there being a spread in a market? So I absolutely believe that the information market becoming financialized is actually a pretty decentralized way of pushing forward what people care about the most without there being an intermediary. And then the other thing on top, again, like professional gambling is such a life skill. Like knowing how to play poker, knowing how to sports bet, knowing how to do parlay bets are important things. And we shouldn't make it criminal. And we definitely shouldn't kind of look down upon that as like an activity that is beneath anybody, because it's actually just a huge unlock for how people think. You recommended a book to me some time ago by Billy Walters.
Oh, GOAT.
Which I would also recommend to anyone here listening to give it a read. It's The Secret Life of Gambler, in the ways that you get to experience all the highs and lows of an addiction that could also be used into something pretty productive. And it's his whole, autobiography, right? Yeah. And there's a quote that he shares that I think is really important to kind of cement in our minds, which is that the harder you work, the luckier you got. And I think there's nothing more emblematic than what Polymarket can do for the average person. The harder you work, the harder you try to get information. These markets are generally full of opportunities because information is in itself not something that is that's obvious to know how to price.
Yeah. Listen, I'm very excited about it. Billy Walters will be having a field day with prediction markets if he's out there still. Thank you very much for doing this. We'll do it again next week.
Let's do it.